Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Axalta Coating Systems Ltd. Annual Report. Axalta Coating Systems Ltd. offers a diverse range of businesses and services across various industries. The company operates through two main segments, performance coatings and mobility coatings. Under the performance coatings segment, Axalta provides coatings for building materials, cabinet, wood, and luxury vinyl flooring, as well as furniture applications under several brands such as Imran Industrial, Toughcoat Industrial, Corler Industrial, and others. These products cater to various industries including construction, furniture manufacturing, and automotive. In the mobility coatings segment, Axalta develops and supplies coating systems for original equipment manufacturers, OEMs, of light and commercial vehicles. The company also offers coatings for various commercial applications such as buses, rail, motorcycles, marine, aviation, trailers, recreational vehicles, and personal sport vehicles under brands like Imran, Centauri, Rival, and others. In addition to these main segments, Axalta provides products and services to independent body shops, multi-shop operators, and OEM dealership body shops for repairing damaged vehicles. The company also offers a range of coating systems for various industries including aerospace, automotive, construction, and industrial manufacturing under numerous brands such as Audera, Absite, Alesta, Aquaec, and others. Overall, Axalta Coating Systems Ltd. is a leading provider of high-performance coating systems across multiple industries, with a wide range of products and services catering to various needs and applications. Axalta Coating Systems Ltd. stock price has dropped by approximately 8% over the past year, as of February 10, 2026. A significant news event contributing to this decline was the company's fourth quarter and full year 2025 earnings report, released on the same day. The report revealed that Axalta missed earnings expectations, with a net income of $60 million, or $0.28 per share, falling short of Wall Street analysts' average estimate of $0.61 per share. The company's quarterly net income decreased from $137 million in Q4 2024 to $60 million in Q4 2025, and refinished net sales declined by 7% year-over-year, while industrial net sales decreased by 5% year-over-year in the fourth quarter of 2025. Following the earnings release, Zacks Investment Research downgraded Axalta's stock to a sell rating, anticipating underperformance in the near future. Other factors that may have contributed to the negative sentiment and stock performance include increased short interest, institutional selling, and concerns over the company's debt load. Critics argue that a high debt load combined with reliance on cost actions and efficiency makes the company's earnings profile more vulnerable to any slowdowns in volume or pricing pressure. These factors collectively contributed to Axalta Coating Systems Ltd.'s stock price drop of approximately 8% over the past year. Axalta Coating Systems Ltd. maintains a market capitalization of $7 billion, broadly in line with the industry peer group. Axalta Coating Systems Ltd. trades at a higher price-to-earnings ratio of 20 times and a higher price-to-book ratio of 3.1 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 73% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On one hand, the launch of new technologies such as Axalta Urus Mix, Axalta Nimbus, and advanced color matching tools has contributed to revenue growth. Additionally, expansion into new markets and applications, strong relationships with top distributors, and growing demand for environmentally responsible products have also driven revenue growth. The industrial end market, particularly in regions such as Latin America, has experienced significant growth due to factors like government infrastructure spending, equipment replacement cycles, and evolving environmental standards for sustainability. The global commercial vehicle production and overall economic activity have also contributed to revenue growth in various regions. However, fluctuations in overall economic activity within geographic markets, changes in product sales prices and raw material indexing, level of competition faced by products, including price and quality competition, have led to revenue decline in certain regions such as North America. The impact of tariffs on raw materials has also affected revenue growth. Furthermore, regional light vehicle production, global commercial vehicle production, overall economic activity, government infrastructure spending, equipment replacement cycles, evolving environmental standards for sustainability, and demand for sustainable solutions and environmentally responsible coatings have all contributed to revenue growth in various regions. The net income of the company experienced a mixed trend over the 2-year period. Initially, it increased by $110 million from 2023 to 2024. However, this growth was short-lived as it decreased by $12 million from 2024 to 2025. Furthermore, when considering cumulative translation losses, the decrease in net income was even more pronounced at $205 million. The profit margins of the company also underwent a change during this period. While not directly stated on some pages, an increase of 13% in net cash provided by operating activities from 2024 to 2025 suggests that profit margins improved during this time. This improvement is likely due to cost-cutting measures and efficiency gains. The reasons behind the changes in net income and profit margins are multifaceted. Reduced demand for refinish coatings, decreased new car sales and production, and increased cost inflation all contributed to the decline in net income in 2025. Additionally, consolidation among distributors, changes in purchasing behaviors of large customers, and reduced demand for automotive OEM coatings due to autonomous vehicles and new business models negatively impacted profit margins. The company's financial performance is a testament to its ability to generate significant operating cash flow. A thorough review of the provided summary reveals that the company has consistently produced positive operating cash flow over the past 3 years. The data points on pages 48, 49, and 69 confirm this trend, with net cash provided by operating activities reaching $649 million in 2025. Furthermore, page 81 highlights another aspect of the company's financial health, as operating lease cash flows are also positive. This indicates that the company is not only generating sufficient cash from its core operations, but also managing its leasing obligations effectively. Overall, these findings suggest that the company is indeed generating positive operating cash flow, a crucial indicator of its financial stability and growth potential. The company's financial performance has shown significant improvements in its debt level and interest expenses over the past year. According to the extracted summaries, the total debt decreased by $231 million from 2024 to 2025, with long-term borrowings decreasing by $222 million. This reduction in debt is a positive sign for the company's financial health. In addition to the decrease in debt level, the interest expenses have also seen a significant decline. The interest expense, net, decreased by $29 million, minus 14.1%, from 2024 to 2025, indicating that the company may be benefiting from lower interest rates or reduced borrowing costs. This reduction in interest expenses will likely contribute to improved profitability and cash flow for the company. Overall, these changes suggest that the company has made progress in managing its debt level and reducing its interest expenses. These improvements are likely to have a positive impact on the company's financial performance and provide a solid foundation for future growth. The management of the company is optimistic about its future prospects, citing a proposed merger with Akzo Nobel N.V. as a key driver for growth and success. The combined entity will be well-positioned to capitalize on opportunities in various end markets, including refinish and industrial coatings. To achieve this goal, the company has implemented several strategies aimed at reducing market risk through hedging balance sheet exposures using foreign currency forward and option contracts. This approach is focused on managing financial performance rather than speculative gains. In terms of growth and expansion, the company's 2024 transformation initiative is expected to result in significant cost savings and improved cash flow generation. Management is also committed to funding pension plans and implementing stock-based compensation and equity incentive plans for employees, directors, and consultants. Overall, the company's outlook and strategy are centered on driving financial performance improvement through strategic investments, cost reduction, and risk management. The company's financial activities have been focused on strategic investments and share management. One notable aspect is the authorization of a common share repurchase program worth $700 million, as mentioned in page 26. This indicates that the company has made provisions to purchase its own shares. Furthermore, page 105 reveals that the company has indeed bought back shares, specifically redeeming €450 million aggregate principal amount of Euro senior notes due 2025. This action demonstrates a deliberate effort by the company to manage its share capital and potentially enhance shareholder value through share buybacks. There are concerns about inventory buildup and supply chain disruption that could impact the company's operations. One of the main risks is price increases and business interruptions, which could lead to reduced global industrial output and customer inventory rationalization, page 12. This could result in distributors reducing their inventory levels with respect to the company's products, page 18. Supplier capacity constraints and production disruptions may also cause supply imbalances, page 19, while changes in raw material prices, including tariffs, could lead to inventory obsolescence and quality loss, page 41. The company's reliance on distributors' inventory levels is a significant assumption in estimating variable consideration, page 76. Furthermore, the company has experienced an increase in inventory levels from $22 million in 2024 to $44 million in 2025, pages 97-115, which may indicate potential issues with supply chain management. That concludes the financial summary for Axalta Coating Systems Ltd. Feel free to comment below, and I will be happy to answer them when possible.